I mean, it's been a roller coaster, really. Looking back 12 months, I mean, commodity prices were starting to really rocket. I mean, copper prices were at all-time highs. Zinc was rising. We went through this crazy nickel market fiasco, but that sent nickel prices through the roof. And those were all real pressures. Those were all real pressures stemming from supply demand insufficiencies. Not some of them immediate, like some of them like in the moment, more of them being like looking a little bit longer term. But a lot of metals markets, even the really big ones, are quite immediate. They really respond to what's happening like over the next 3 months. And so there was some shortages there. And this is all, COVID recovery and Chinese stimulus and all of these things needing metals. And then you pile inflation on top of that, right? And a strong dollar. And it just like the whole combination sent prices really through the roof. And so that lasted until the tightening train entered the station, right? And so then we get into, the Russian invasion of Ukraine that coincided with sort of the reality of tightening coming home to roost for a lot of market participants, especially in North America, but also in Europe. And that reality just turned everything around, right? Because tightening, rate hikes, and reduction of government support, monetary support, that's all about trying to slow the economy down, because that's one of the main reasons that we have all this inflation. Now, inflation right now is a whole other conversation. There's lots of reasons that we have rampant inflation right now, but a strong economy is certainly the thing trying to pull inflation back in. So they raise rates, they try and slow growth, and nobody bets on growth when the central bank is trying to slow growth. And buying metals is all about betting on growth, right? That's why you buy copper. That's why you buy iron ore, whatever it might be. And so those prices really turned around. And I should say, and a strong dollar really played into that, because the US was, of course, the first central bank to really start tightening, and they moved rates, remember, from 0 to 2.25 in the space of 4 months. That is a dramatic move, stand out across the globe, and currencies are all relative. So the US dollar gained in a dramatic fashion because metals are priced in dollars. That pushed back against metals, just as that what's going on with growth situation was also playing out, and that pulled a bunch of metals just right back down to earth. So that's sort of where we are now, right? We're still in the middle of this tightening cycle. There's still more rate hikes to come, to be sure. And so there's still a lot of unknowns out there about what the tightening will do, what will really happen to growth, how this will play out, in North America, globally. So there's still a lot of unknowns out there. At the same time, there isn't enough of most of these metals if we look a few years out. The greenification of the world is a paradigm shift in demand for copper, even, which is like one of the biggest and most important metal markets in the world. It's a paradigm shift for copper. And I can talk more about why copper has ended up in this sort of supply deficit that we are really facing in a few years. But that similar story plays out across a bunch of green metals, if you want to call them that. So right now we're in a bit of a transition point where people still aren't interested in growth, because we're still talking about central banks tightening us into a recession. And like I said, nobody buys growth when we're being tightened into a recession. But in a slightly longer time frame, the metal stories all make a lot of sense. So we're in a bit of a waiting game, a holding pattern for the moment for those metals. So that's what's been going on there. Now, I haven't touched on gold. We could get to gold as a second topic if you'd like.